Okay, so this next video lecture is for our module number 5. So this is entitled Annual Income Tax for the Individuals, Estates, and Trusts. Okay, so for the content, we will be discussing about the estates and trusts. We will define these two terms, BIR Form 1701 and the Account Information Form, the documentary requirements for individuals, estates, and trusts, as well as how to file, okay, the ITR for these types of taxpayers. So to begin with, let us start with the definition of our terms, estates and trusts. So basically, when we say estate, this is everything comprising the net worth of an individual. So this will include all the land and real estate, the person's possessions, financial securities, cash, and other assets that the individual owns or he has the control or controlling interest thereof. So legally, a person's estate is his total assets minus liabilities or net worth, or what we call equity. So estates are very important, especially upon the death of an individual. So that's why we have what we call estate planning. So when we say estate planning, this is the act of managing the division and the inheritance of the person's personal estate, and arguably represents the most important financial planning of an individual's life, because if a person has many possessions or he has a great net worth, so upon his death, the question is who will inherit those possessions. Okay, so that's why estate planning is very important. So generally, an individual draws up a will of testament, which will explain the testator's intention for the distribution or how to distribute his estate, okay, upon his death. So a person who receives the assets through the inheritance is what we call the beneficiary. So here in the will and testament, the person who own the possessions and equity will define or will explicitly state who will receive those possessions upon his death. Okay, so that is what we call estate. Again, the net worth or all the possession of a person. So what about a trust? When we say trust, this is a fiduciary relationship in which there is one party who is known as the trustor, who gives another party the trustee or the right to hold the title to the property or assets for the benefit of the third party. Okay, so this is for the beneficiary. So trusts are established to provide a legal protection for a trustor's assets, to make sure those assets are distributed according to the wishes of the trustor, and also to save time, to reduce the paperwork, and in some cases to avoid or reduce inheritance or estate taxes. In finance, a trust can also be a type of closed-end fund built as a public limited company. Basically, a trust is someone, or this may be an institution, a financial institution, which is handling the assets of the trustor. The trustor is the person who has the net worth or possession. Okay, and the beneficiary of this estate or possession is still a minor. Okay, so we all in law, if the beneficiary is still a minor, so basically that person cannot own or manage property or possession or net worth. So that's why before this beneficiary turn into his or her legal age, so the trustee will be the one to manage and hold the assets in behalf of the beneficiary. Okay, so this is the purpose of a trust. So, trusts are created by settlors or an individual along with their lawyers. So, they decide how to transfer parts or all of the trustor's asset to the trustee, and these trustees also hold on to the assets for the beneficiary of the trust. So, the rules of the trust will depend on the terms on which it was built. Okay, so there is a contract. So, in some areas, it is possible for older beneficiaries to become trustees as well, okay, aside from the financial institution. For example, in some jurisdictions, the grantor can be a lifetime beneficiary, okay, and a trustee at the same time. So, again, it depends on who the trustor gives the trust unto. Okay, it may be a financial institution or someone who is older than the beneficiary that they know who can take care, okay, of the possession as well as the beneficiary. So a trust can be used to determine how a person's money should be managed and distributed while that person is alive or even after that person's death. So a trust will help avoid the taxes and probate. It can also protect assets from creditors, and it can dictate the terms of an inheritance for beneficiaries. So the disadvantage of trust are that they require time and money to create, and they cannot be easily revoked because this has a contract, okay, which govern this setup. Okay, so this is what we call trust. So those are estates and trust. So along with the individual, okay. So in this type of income tax filing, as we go along with our discussion, so this estate and trust will also use these forms that we will discuss, okay, in the next pages. So basically, BIR Form 1701 and the account information form. Your BIR Form 1701 is also known as the annual income tax return for individuals. This includes now the individuals who earns mixed income, meaning the individual's income is coming from his salary and or his business, okay, and other source of income. Okay, so along with that individual is the estates and trusts. So they will be using form or BIR Form 1701 in filing their taxes. So this BIR Form number 1701, they shall be filed by the individuals who are engaged in trade or business or the practice of their profession, including those with mixed income or those engaged in the trade or business or profession who are also earning compensation income at the same time. So in accordance with Section 51 of the Code as amended, so the annual income tax return summarizes all the transactions covering the calendar year of the taxpayer. So this return shall be filed by the following individuals regardless of amount of their gross income. Number 1, if they are a resident citizen engaged in trade or business or practice of profession within and without of the Philippines. Okay, because they are resident citizens. So their income derived both from within and without of the Philippines are taxable. Second, a resident alien, non-resident citizen or non-resident alien individual who are engaged in trade, business, or practice of their profession within the Philippines only. Number 3, a trustee of a trust, guardian of a minor, executor or administrator of an estate, or any persons acting in any fiduciary capacity for any person where such trust, estate, minor, or person is engaged in trade or business. And number 4, an individual engaged in trade or business or in the exercise of their profession and receiving compensation income at the same time. So these are the individuals who will be filing their income tax using BIR Form 1701. So again, the deadline for this is every April 15 of each year covering income for preceding taxable year. Okay, so therefore, the taxpayer shall file, okay, this form on or before April 15 of the next year, okay, to avoid penalties for late filing. Okay, so this is how our BIR Form 1701 looks like. Okay, so it has the column or the items to be filled in for the year, if that is amended, return, short period return. Okay, the taxpayer TIN, what the taxpayer type, if that is a single proprietor, professional estate trust, or compensation earner with other source of income. Okay, so another is, of course, the taxpayer's name is very important, registered address, date of birth, citizenship. Okay, so the basic information of the taxpayer should be filled in this form. Okay, so for the second part is the total tax payable. So here, the taxpayer can also file together with their spouse, okay, if they wish to file it, okay, in combined income tax return. So here we have the tax due, and then our tax due was computed in our the example of that was in our module number 2. Okay, so here the tax due that was determined there, we will deduct the total tax credits or payments in the previous taxable period. Okay, and then after that, after deducting those tax credit, we will now have the tax payable. So it may be an overpayment or a tax payable due to the BIR still, depending on the result. Meaning if the tax due is higher than the tax credit, then there is tax payable to the BIR. And on the other hand, if the total tax credit is greater than the tax due, then there is overpayment. Okay, and then after that, we will deduct also the portion of the tax payable amount for the second installment paid on or before October 15. So this is in the case of filing the ITR using the quarterly, okay, forms or filing. And then after that, that will be the amount of tax payable. And if the taxpayer filed late after April 15, so we will add penalties such as the interest, surcharges, and compromises. Okay, so that will be the total amount payable. Okay, so part 3 will be the details of the payment. So how this taxable or tax due was paid by the taxpayer. Okay, so we also have here in page 2 the tax filer's last name. Okay, part 4 is background or information of the spouse. This is in the case if they will file it in a combined ITR. Part 5 is the computation of the tax. Okay, and then okay, this is just the same. This one is for the compensation income. Okay, and another is for the business income. Okay, if the taxpayer is a mixed earner. Okay, in the third page. Okay, so this is for again for the income earned by the taxpayer through engaging or trading in business. Okay, so this is where they will file or fill in the details for the amount of their gross revenues, receipts, and fees, and other non-operating income. Okay, to determine their tax due for their business income. So we have here the Schedule 4, Ordinary Allowable Itemized Deductions, okay, for the business and or engaging in trade or business. Okay, we also have the Schedule for Special Allowable Itemized Deductions. Okay. Okay, for page 4, so this is for the spouse detailed computation. Okay, and Okay, Part 6 is the summary of the income tax due, taken from the previous pages. Part 7 is the tax credit payments. Okay, Part 8 is the tax relief availment, if there are any. Okay, Part 9, this is the reconciliation of net income per books against the taxable income of the taxpayer. And it also has the graduated income tax table provided, okay, to determine the taxable income. So this is for the BIR Form 1701 for individuals who are earning mixed income for estate and trust.